Hello and welcome to the day ahead. It's Monday, December the 5th. I'm Andrew Gagan. Well, it was a mixed session on global markets on Friday. Wall Street's S&P 500 ended down but well above the day's lows as investors contemplated a stronger than expected US jobs report. The major indexes achieved a second straight week of gains, with the S&P 500 up more than 1% and the Nasdaq rising more than 2%. Growth in tech companies such as Apple and Amazon fell, sold off on concerns that interest rates will continue rising at the current pace. And shares in Ford went into reverse on lower vehicle sales in November, while food delivery firm DoorDash lost more than 3% after its stock was downgraded by brokers. Well, job hiring remains strong in the US despite the thousands of job cuts recently announced by tech companies. Nonfarm payrolls increased by 263,000 last month, well above the 200,000 forecast by economists, while average hourly earnings increased 0.6%, up from 0.5% in October. That raised the annual increase in wages to 5.1% from 4.9% in October, with wage growth having peaked in March. The gains in employment last month were led by the leisure and hospitality sectors, while retail trade contracted. And the unemployment rate was steady at 3.7% in November, while the labour force participation rate was slightly weaker at 62.1%. In the wake of the report, Richmond Fed President Thomas Barkin said there'll likely be a sustained period in which there will remain a shortage of workers, saying fewer workers would constrain our growth and pressure inflation until businesses and governments can deliver productivity enhancements and/or structure incentives to bring more workers into the workforce. While Chicago Fed President Charles Evans said the central bank will likely need to raise borrowing costs to more than envisioned in September, saying we probably are going to have a slightly higher peak rate of the funds rate, even as we will step down the pace of rate hikes from the 75 basis point per meeting pace of recent meetings. And those comments erase gains made by the US dollar in response to the jobs data, and the Aussie dollar is sitting at 67.9 US cents. US Treasury yields were little changed despite the jobs report raising inflation concerns. The 10-year at 3.55, the 2-year at 4.32%. Well, the local share market is set to begin the week positively. ASX futures up around 0.25%. And at their meeting overnight, OPEC Plus members have agreed to keep oil output targets unchanged, yet have reiterated the need to take immediate measures to ensure price stability. Global oil prices had fallen ahead of the meeting as the EU slaps a price cap on Russian crude exports. Iron ore futures rose 4% to see a price rally of almost 16% over the week, buoyed by hopes of a reopening in China. Base metal prices moved higher to take copper and aluminium up more than 6% for the week, and gold prices eased slightly. The crypto market has been relatively stable over the weekend, with Bitcoin hovering around 17,000 US dollars. Well, looking at the week ahead and locally today, business indicators. Tomorrow, the RBA board meets and it's expected to lift interest rates another 25 basis points, taking the cash rate to 3.1%. We'll also get the balance of payments and household spending, Wednesday national accounts, Thursday payroll and jobs data plus international trade. And overseas, we get US factory orders, Tuesday US international trade, producer prices and US consumer sentiment. And that is your day ahead. We'll see you again tomorrow.